What's up, everybody? It's Wednesday, July 26th. Today's lesson, I just wanted to cover the trades we took for FOMC, which was today. A little bit of insight as to what to expect for the next 2 days, Thursday and Friday. This week's been a little bit tougher just because the first 2 days we did get chopped out. It was a little frustrating. We need to keep this in mind for the next FOMC meeting to either take it very easy the first 2 days or just not trade at all or just save your mental capacity. I'm not gonna lie, these first 2 days of the week, they were frustrating for me. I tried forcing some stuff, didn't have a lot of success these first 2 days, but more than made up for it today. Today, honestly, I made a week's worth of gains in a day. I'm not even gonna front with you guys. The trades were highly favorable, highly probable. We'll go over why we took them, why we looked in a certain direction, why we had that plan even before the meeting came out. A lot of people, when FOMC releases are dropped, they focus too much on the macroeconomics about Powell being dovish, hawkish, etc., etc. Not that you shouldn't focus on interest rates for the stock market, but focus more on what the chart is telling you, right? When we're focused on 0 day expiration, especially when the IV is a little bit higher for FOMC, you can just trade the chart. You can just trade the chart. I don't listen to the meeting. I just feel like it's a lot of fluff. It's a lot of reporters asking questions. Sometimes I feel like these questions are rehearsed and it's all just a show. That might be a conspiracy theory, but without further ado, let's go into a little bit quick of the weekly chart on ES, what to expect. I'm still not going to make the call for all-time highs, even though it is looking likely. We finally closed out of this volume imbalance gap. We closed above it, right? This week, we're seeing a little bit more expansion, right? I'm not going to make the call just yet as to this 4662.75 level because we are still about, 60 points away from that level. What I really want to see tomorrow, it's going to come off the daily chart, actually, not the weekly. The daily chart, you have a little bit of compression and this high right here that we're approaching. Let's focus in on this, right? So we just came out of, where is my rectangle here? We just came out of this daily little fair value gap right here, right? That's sending us higher. We have a bunch of equal highs above us here, right? Boom, 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 which we tapped here, but we're gonna retrade and reprice into here. That's that 4.6, what is that, 11? 4609.25. So we're about 3 points away from it right now as we speak. My bias for tomorrow is gonna come off NQ. To be honest, I know we don't focus a lot on NQ. What we need to focus on with NQ is okay. NQ has been much stronger this whole bull run. NQ has been much stronger than ES, right? If we focus on NQ, and you guys could help me chart this if you want to be active or participate. What do you guys see on the daily chart for NQ right now? And I'm giving you a big hint right here. What do you guys see on the daily chart on NQ right now? What are we trading into on the daily chart? A bearish fair value gap, right? Very, very simple. We're trading into here, right? NQ is going to really dictate the next 2 days of price action, which is unfortunate because we don't really trade QQQ that much. I am still going to trade SPY tomorrow. NQ, what a lot of people will overcomplicate about this daily fair value gap is that, okay, we want to see it retrace into this consequent encroachment. I'm using a big word. We want to see it reprice and retrace into 50% of this gap, right? If you look at 50% of this gap just based upon this drawing, we're about 100 points away, right? For NQ, it can do that in one day. It can do that in a trading session. It could run 100 points. It could run 50 points. That's not a big deal, right? So my bias for NQ is just like this. I want to see us reprice into 50% here and then look to sweep all these lows that rest below us 100 and what is that, 20 points away. So NQ has a lot of range. NQ, I am bearish, just not yet. I don't want to pull the trigger too early. That's one scenario I have for NQ, right? Let's focus back on ES because NQ is leading us now. For ES, I want to see us take out these highs. I don't think we actually rushed this weekly level at 466.275, whatever the level was. I want to see us take out these highs and then look to trade lower, right? So for tomorrow, let's see what news we have. Hopefully we have a 10 a.m. news drop. Tomorrow is July 27th. We have 8:30 news. Okay, we have pending home sales, which is huge. Thank God. If we have some high impact news, not even high impact, if we have a news volatility driver at 10 a.m., there'll be a nice trade opportunity for us to watch and wait for, right? So I'm going to post this for the chat really quick. It could absolutely be a trend day. I don't want to keep my expectations that high, because today we already had a really, really good move. We can continue on for the rest of the week because the weekly candle still has 2 days to close. But tomorrow, that 10 a.m. news is what we're going to watch, right? What I hope for tomorrow and the scenario that I'm planning for tomorrow is that it's a similar scenario to what we usually take with a waterfall play, with a failure to go higher, right? I want to see us push up off open on the 1 minute chart. I want to see us leave a bullish fair value gap. I want to see us trade into that bullish fair value gap, take out the recent highs, right? Wait for that 10 a.m. news to come. I want to see us sweep all the highs and then develop a failure to go higher setup as to where we could take it from the fair value gap and run it back all the way down to low of day. That's my ideal scenario for tomorrow. That's my ideal trade. That's my 10 out of 10 trade setup, right? So we could definitely take a quick scalp for longs in the morning, clean up all the highs if that's what the market wants to give us. Look for a reversal play around 10 a.m. Hopefully we could finish by 10:30, 11 latest. That's my game plan for tomorrow, right? My bias on ES right now, which I do believe we take out these daily highs probably in the Asian session, probably tonight, could be within this lesson too. 4 points is really nothing for futures. I want to see us clean up all these daily highs and then look to reverse lower and then target this 4558. ES had a lot of reaction at 4550. What I've been noticing is at psychological level, I want to see us clean up these lows on the push down, right? So it's a simple, clean target, very close too. But we're in a little bit of a tight range. The 10 a.m. news will give us the answer of what we're looking for. But for right now, expectations stand at just that, right? Let's see if we could take a quick long scalp, let all the highs get cleaned up, look for a nice reversal play. We can have a two trade day tomorrow and call it a day, right? If you guys want to wait for 10 a.m. and take one high probability trade, one trade where the volume is there, one trade where it's probably going to move after the news drop, wait until 10. Get on voice at 9:50, look at the action, see if we need to clean up some more highs before we reverse, or we could play a failure to go lower. But in my ideal scenario that I want for tomorrow is a couple pushes up, a couple sweeps of the highs, look for the failure to go higher on the 1 minute, and then take it like we do a lot. We play that setup a lot of times, right? So the only thing that's going to change is the premium strike price, and that's just about it, right? The same trade setup and ideology is going to always be there. So that's my ideal scenario for tomorrow. What I want to get into right now is SPY, right? SPY, I want to analyze on the 1 minute chart. I want to go over FOMC's action today, right? So let's go out until here. So market really, really had nothing until 2 o'clock. I'm happy we didn't take anything. Hopefully you guys didn't take anything before 2 p.m., right? It really wasn't worth your time. It wasn't worth the mental stress to even participate, right? This trade made a lot of sense to me on the 5 minute actually, and then we'll get into the 1 minute of why we actually took it. So over here, let's make a little trend line for 2 p.m. So let's make a vertical line. Where's the vertical line? Right here. Vertical line at 2 p.m., right? 1400. What we'll type here too is we'll do FOMC begins, right? And then you can see the crazy reaction. At this point in time, what I would be looking for and what I was looking for was this, right? We had a bunch of lows we needed to take out for FOMC, right? And once we took out these lows, let me actually clean up the chart. You guys know 2 o'clock was FOMC, right? We had a bunch of lows that we were targeting around 2 p.m. 2 p.m. comes. The first candle that happened at 2 p.m. was a sweep of these lows. On the 1 minute, it's going to make more sense. Does everybody follow so far? Was that confusing or are you guys with me? You guys are with me? Okay, perfect, right? FOMC begins 2 p.m. Boom, right? Sweep all these lows, this guy and this guy. So at this moment in time, that's where I started watching the 456 calls, right? Already I was looking at calls. You have this low right here, right? FOMC, they begin the meeting. Jerome Powell's not even on at this time. This candle comes in, takes out these two lows. Okay. At this point in time, I'm not bearish. It makes no sense for me to be bearish, right? The first thing that I'm looking for is okay, we swept the lows. The most ideal thing to look for is this double top. This double top right here, right? Everybody will treat this as resistance. They'll treat this as a rejection spot from earlier. That's my target as to where, okay, if I'm long, I want to look to trim above this spot. So we sweep the lows. push up. There's no trade to be had here, right? We take out this high. We have this high here. We come back here, right? Flirt with this level where we took the lows again. We put in a low, trade up a little higher, and we leave this little imbalance, this little gap that we took, right? This was the trade that we actually took together, right? So 231 was when I gave the signal. Honestly, I don't think we saw any drawdown. The entry was pretty spot on, to be honest. Not even to boost my ego, but entry came at 231 for me. Maybe it was about a minute early, whatever. You guys had time to get in. First trim spot comes at this double top. After that, it's a straight momentum play, right? Contracts went from 51 to like $1.40. I think maybe $1.50. I forgot. But it's a strict momentum play at that point in time, right? I want to see on the 15-minute if we have other targets. And we actually did. I didn't actually see this earlier, but look, yesterday's high that we took out too. That was the reversal point. So I actually didn't pay attention to that, but I trimmed. I was just playing this as momentum. I was focused on the 1 minute mainly. When we go back to the 1 minute after we took the long, I'm gonna check my phone for when I filled for those puts at what time. I'll tell you guys right now. I filled on these puts at 3:03, and by 3:08 that was already 200%. 3:03 was where I got in. I got in right here. This guy right here. So everybody was asking me, why did you take this trade? There was no gap, there was no imbalance, right? The most logical thing, and I want to zoom out to this hourly level. What the hell did my chart do? Let's focus here on the hourly, right? Let me get rid of these drawings. If you guys don't follow, let me know, please, because I want to actually get this through everybody's head, right? Let's get rid of this too here. And let's get rid of this too here. This is yesterday's high, right? On ES, this was like 4609. And I think Lali was talking about it too. This is an hourly high, a higher time frame. People call it a PD array, they call it a liquidity sweep, whatever you want to call it, you can call it, right? This level right here, as soon as we took out this level on SPY, you cannot be bullish anymore. Risk to reward after we just took out yesterday's high, it's very tough to long and make money, right? Is Jacob in this lesson? I wanted to talk to him. I'll talk to him about it tomorrow of why he made a mistake. After we take out a 4-hour high, a 1-hour high, a 30-minute high, 15-minute high is valid too, a higher time frame high, it's very hard to still be bullish. I want everybody to understand that, because a lot of times this is what everybody was seeing, and I made the mistake of not warning you guys. This is where I was a little bit ignorant. I was focused. Everybody at this point in time is looking at exactly this. This is where ICT stuff gets a little bit confusing, where it doesn't make sense. Everybody at this point in time is like, okay, we're retrading into this bullish gap. We have a bunch of highs here. Let me long here and target these highs. Why did that fail? Let's talk about narrative tonight. Let's talk about why did it exactly fail? Why did it exactly fail? And I'll give you the answer is we took out an hourly high, right? We have highs here that we took out the other day, yesterday. We take out yesterday's high. It is very, very, very hard. It's very not probable. How do you say not probable? Just very tough to be long again and target those highs after they just got swept on an FOMC move, which is all manipulation. FOMC is a day where we're going to try and run the lows first and run the highs. If they run the highs first, they're going to blitz the lows. I use the term blitz deliberately. When you look at a blitz in football, you don't see it coming, right? When they go for the quarterback, it's always the defender or the nose guard or the linebacker. You don't see him that gets your quarterback out of nowhere. He splits through your defense or your offensive line. I don't know football like that. Goes through your offensive line and then tackles your quarterback, right? The first blitz of today, and you could see it on the hourly, is we peek through here, right? Sweep these lows. They blitz the lows and then they rush the highs. After they rush the highs on the hourly, it is in your best interest to start looking for a short setup. I don't care if it fails. Risk to reward at this point, after we had just swept an hourly high, makes a whole bunch of sense, and it's going to be highly probable because we took out a higher time frame high. Before I get into why I entered, does everybody kind of understand what I'm talking about? You guys understand the mindset of why we flipped our bias that, okay, took out an hourly high, I'm looking for puts now. That's why sometimes on Twitter, when I'm watching something, I'm either watching the 15-minute, I'm watching the 1 minute, 5 minute. I want to see an important level get taken out, and then I need to gauge it myself as to, okay, if I was to short here, would it make sense? If I was so long here, it wouldn't make sense. Judging by the contracts too. When I was buying these contracts, these 455s, I'm gonna actually look at the contract chart too. And I might let me see if I can send it in here. When I was looking at these 455s, they had looked pretty bottomed out. They opened the day, and I'll tell you where they opened up at. They opened at $1.80, right? I'm buying these contracts. I was buying a boatload of them at 33 cents. They opened at $1.80. I couldn't sell at opening price because, to be honest, I don't know. Maybe I wasn't greedy. Maybe I didn't give my trade enough room, but I was happy and content with what I got. But let me post this in the chat for you guys, right? Opening price $1.80. Let me send this picture to you guys right here. Look, let me post this in the chat. This is where reading premiums makes a lot of sense, right? When they blitz one side, you have to look at the other side. You have to look at the beaten down premiums, right? I know it looks like a stick. I know it looks crazy on the 1 minute chart. When you're buying these premiums and look at the time frame around 302, which is 15 on the chart. Can everybody go to my screenshot I just sent and go to 15 on my chart? Does everybody see that before that green rush up? Look at how contracts were kind of bottoming out and holding premium at that level. This is something that you need to start paying attention to if you don't already. Does everybody see what I'm talking about right now on the screenshot that I sent in the chat? They're starting to look bottomed out. Every single bounce that comes in, they're not really losing that much value. At that point, it's all about risk to reward. It's okay. I'm buying these at 33. I was willing to risk 15 cents on this play, which sounds like a lot, but it's a normal trade size for me. My risk to reward when I'm buying them at 33, 34 cents, and I'm trying to target, I'm targeting these relative highs, which was $1.40, $1 flat, which is a psychological level. I didn't get that $1.60. I wish I did. That would have been 400%, but you can't really complain that much, especially on FOMC. Any pop, any pullback, contracts to get decimated. They can get decimated instead of 10, 15%, 20 to 30. And I'm not willing to risk that much for an extra 20 cents of premium. But the entry came at 303. This was a more of a momentum play. This wasn't me waiting for the gap. If I had waited for the gap, I would have missed the whole play. I took a really aggressive entry at 303. This was my first level to break. 303 is right here. Right. As soon as we swept this low and started pushing back down, I kept on adding. And my target was the low that we had left, which was this guy right here. That was my main target. 453.81 was my main target, right? As soon as we had gotten that in about 4 or 5 candles, I got out at 308. As soon as we got that, the trade was over, right? But this was all a premium reading trade. After we took out an hourly high, it makes sense to look short. Had we had taken out an hourly low, it would make sense to go long. FOMC is all about that. Do you guys have any questions about how to trade FOMC? Why did I take that? Sometimes you just need to have the levels mapped out. Think about situational analysis, right? It can go this way, this way, this way. Or if they take out this high, this high, this high, we'll target the lows. If we take out these two lows, we might go back and target these highs. FOMC is highly manipulation day, super high manipulated day. Learn how to play the manipulation. Don't just say that, okay, fade the first move. Yeah, that makes sense, but why are we fading the first move, right? Everybody says that the first move is fake. It's not really fake. The first move is just kind of a blitz, right? You can make money. We made money on the first move. The long was, don't discredit the long. The long gave us a nice return. I think it was maybe 10 minutes, maybe 15 minutes. The short side was a faster trade, but the long made sense, right? Blitz these lows here, target yesterday's high. If there was another high to target, we would target that as well. After we had peeked through and taken this high, it makes the most sense at that point to start looking short. And when we look short, we want to target all these lows right here. At this point in time, even if you had targeted this low, 453.97, that's not a bad trade. The extendo clip trade, the super bagger trade comes at the low of day at this point in time, which was 453.81. But does everybody kind of understand how to trade FOMC? The first move isn't fake. You can play the first move if you know what to look for. What do we look for today on the long? We had a nice clean gap that we traded into. Contracts were holding premium. We were watching these contracts for a while. I was watching these contracts at 60, 64, 65. They pulled back to 54 and I started entering. I gave you guys 51 because that's what it was at. And honestly, I think 51 was a good entry. I had a 54 average. I kept buying around 54, 54 was a good ad, but 51 too was a phenomenal ad. And I was only risking on that trade. My stop loss was at 38 cents. For an FOMC trade to risk 13 cents and to make almost a whole dollar on it, this is where risk to reward ratio goes through the fucking roof with options, right? After I had taken my second trim too, the trade is risk free. Everybody talks about arm multiple. How much am I risking? How much am I looking to make? When you essentially on a trade don't have any risk, where your stop loss is above even, you have nothing but reward. Obviously, it can pull back on you. It can go back to break even. That's the risk you're willing to take, but it's a free dice roll. You know what I mean? Option trading, the more I've understood that in terms of like taking risk off the table, letting it go, letting it run, letting it ride, you can have your trades essentially risk free, right? You take the cash flow on TP1 and TP2, you pay yourself, right? You make sure to pay yourself. You protect yourself by putting your stop above break even and try and target old highs, try and target old lows. Maybe 8 times out of 10 it gets hit. Maybe 7 times out of 10 it gets hit where you can run and catch a bag or whatever. But be ready to catch these plays. Who actually caught a decent percentage on the play today? And be honest. I want you guys to be very self-aware. Today was a fantastic day to let your trades run. You have a whole bunch of volatility behind your trades, a whole bunch of opportunity. When you see a lot of volatility like this as an option trader, you have to really perceive it as this is more opportunity actually. It's not volatility. It's more opportunity. 53 to 7. Those are good percentages, mind trap, to be honest, but 53 to 70, let it go to a dollar, right? Trim a little bit slower and let that 53, the buy was so good, let it go. You know what I mean? Let it go. It was a straight shot up. Don't be too quick to take those profits. That's all I'm trying to say is let's have more of a well thought out plan. And I'm not singling anybody out. But on these days, because these days are few and far in between, they're very limited, right? FOMC is what, once a month? Maybe I don't even remember, to be honest. I'm not the most well versed in that. But these are where the opportunities are to be had. These plays can, you know, let's let it go. And don't worry about the past 2 days. That's what I want to also talk to you guys about. I know the past 2 days were shit. I know they were not good. They're pretty awful in terms of execution and how the market was moving. It was actually awful, right? Don't let that baggage come into today. I promise. Just like today's plays. Today we had very good plays. I'm not going to come into tomorrow and look for a 100%er, right? Every day is a new day, though. If for the past 2 days, even if the past 2 days, if I was taking losses the past 2 days, I can't think like that coming into today. I have to be like, short-term memory loss with it. I know it sounds crazy, but that's how every day you can come into the market and perceive it as something new. All the variables change, scenarios change, news drops change. You need to take every day as a brand new day. You can't worry about yesterday you lost, the day before that it was slow. Today was the day. You know what I mean? Size low, absolutely. I wasn't full porting or anything. I had conviction in the place, so I kept regular size. But it's a crazy volatile day. But if you can catch a nice entry, you can let the contracts run. These are the days where contracts can go from 40 cents to $1.60. They can go from 40 cents to $2. You know, let's just focus a lot on our execution this week, which is fine. Don't even worry about it. There's plenty more FOMCs that I'll trade with you guys. Plenty more, right? It's not a limited thing. But I just want you guys to be like, I'll use Mindtrap for an example, and I'm not using him as a bad example. I hope he doesn't get offended. He knows I love him. You had a 53-cent entry, right? I know you're re-entering at 80, but psychologically and just mentally for me, I can never buy the same contract I just bought at 53. I wouldn't feel comfortable buying that same contract at 80 cents. Do you understand what I'm saying? It's just, it might be a psychological thing for me, and I know the trade worked. The setup was there. But when I had just bought these contracts at 53 cents maybe 7 minutes ago, it doesn't sit right with me to pay 80 cents for that contract. Even if the re-entry looks good. That's just a me thing. You know what I mean? Maybe it's just a weird, but we had such a good entry, right? I would That's what I was going to get into. I would roll up into one out the money. One more up out the money. Roll ups are more aggressive, and you get to the point where it's like, okay, I rolled up twice. The third one is probably most likely gonna fail. But just psychologically, if I know I bought a contract 20 minutes ago at at 49 cents. I can't buy it where I trimmed it at. I had one trim at like 90 something. I can't buy where I sold it to somebody else at. It's a psychological thing for me. But I'm happy the trade worked out. Don't get me wrong. I'm very happy the trade worked out. Rolling up is something I don't want to introduce just yet because it gets a little reckless. That's the only reason. I'm not gatekeeping it from you guys, I promise. It just gets to the point where it's like, okay, you don't know when to call it a day. You could just keep rolling up, keep rolling up. You could do it on a trend day, but on a day where you don't have a fucking clear cut $4 or $5 move on SPY, you wreck your account rolling up all the time or rolling down too if you're playing puts, right? I like to trade. You guys know how I trade, right? I buy the contracts when they're relatively bottomed out, tight stop, and I like to run them back to highs. I try to do one and done. Honestly, I know sometimes I'll take a starter and I'll add on to it. I would say 8 times out of 10, I buy full at the first shot. Right? There's been a lot of times, even on voice, when you guys have traded with me, I'll do a starter, then I'll add more, but I'll add usually around my average. I won't really average down that much. Sometimes I'm guilty of that, but I like to have a good buy off rip, or what I perceive to be a good buy, a good average, and then let it ride. Let it go to my stop, let it go to my take profits. But Andrew, you can stop the recording right now. I just want to chop it up with you guys and get you guys' like feedback, whatever. But does anybody have any questions on why FOMC moved like that?